Hello guys, today we'll talk about different bars that you can create using TradeStation platform, and we'll try to get some information about what you gain and what you lose by switching to a certain bar. But before we continue, remember that this video is only for educational purposes and it's not intended as a financial advice. The views and strategies described may not be suitable for all investors. Before making any investment decisions, it's recommended to do your own research and consider seeking advice from a financial or tax professional. Past performance is not indicative of future results. Okay. Before we continue with four bar types that I have prepared for you, let's just do some beginner stuff. Right here you see a daily E-mini S&P 500 future, and if you click on data, edit symbol, you can change the type of a bar or candle that you are using. The most popular are time bars: monthly, weekly, daily, minute. Then you have to specify how many minutes you want it to be: 5, 10, 60, 73, or whatever you choose. Then there are seconds. And we actually will be working with tick and volume later on. And below that, there's another section of different bars that you can use. I will only present one of these, which is Kase bar. And the reason is that some other bars are not real. They show you stuff that that's not really taken place during the session. So we recommend and we actually like the most to work with Kase bars. One side note on Kase bars: if you ever use it, you choose your target range, and then TradeStation gives you two options for creating these bars. One is using 1 tick interval and then 1 minute interval. Don't ever use 1 minute interval because the bars are fake. The algorithm that creates Kase bars on 1 minute aggregation looks into the future and then creates the bar that's not really following the logic of this of the creation. I'll show you an example. Right here I have a Kase bar 8.5 point using 1 minute. So 8.5 is the minimum, right? So all the bars, their size should be 8.5 or greater. But if we plot average true range 1, meaning the true range of the bar, you can see that lots of bars have this range smaller than 8.5, which means that the algorithm checks the next 1 minute bar, and if it's too large, I don't really know how exactly it works, But what it does, it looks into the future, and if it decides then that next 1 minute bar is too large, then it cuts your current bar short, meaning it's not going to be the desired size, and then starts with the new bar. And long ago, I guess that's the mistake that everybody can make. If you run any strategy on Kase bars created with 1 minute aggregation, then your results will be impressive, but just throw it to the garbage bin and forget about it. Okay, let's go to our bar comparison. What I have here are 4 different bar types. They all start at the beginning of December 2023, and then right here we see a 60-minute bar, and I created a little the visualization for bar count. So we have 1,526 bars, and then what you see is a 20 period simple moving average. So in order to make the field equal for all competitors, the next bar I created is the Kase bar using 8.5 point size, using 1 tick aggregation, and then starting at the same time, which is the beginning of December, and we have 1,533 bars, which is really close to what we get by using 60-minute bars. And then we have another bar type. It's the same period, starting December 23, and these are 60,000 share bars. Let's start with counter. We've had a little over 1,500 bars. Right here we have 1,548. And then let's see how it's been created. So we're using traded volume right here, and the bar is created when the traded volume exceeds 60,000 shares. In our case, 60,000 contracts. So how it works? The new bar starts, the counter keeps ticking, and if it gets to 60,000, the bar gets cut, and then the new one will start. The new one will start. And the last is a 37,500 tick bars. Let's check the count, the bar count, 1,565, which is really close to the rest. And then this one, you choose select interval tick. You basically counting transaction, you're counting ticks, how many ticks it took to create a new bar. And then I have it at 37,500 ticks transactions. So instead of counting volume, we're counting ticks. All right, so these are 4 different bars that you can use, and let's compare them really quickly. Let's take a look at the recent price action. Okay, so let's just not go into details for now, and let's just take a look at the behavior of moving average, and then the actual price behavior. So let's start with 60-minute bars. So starting from the peak, you see 1, 2, 3, 4 really strong down bars that are responsible for, I'd say, 60% of this entire movement. And then you got a bunch of tiny bars right here, bunch of tiny bars right here. And then since everybody likes to work with moving averages, we'll check where the crossover happens. So with time bar, you got your crossover at 5,095 points. With Kase Bars, it's at 5,090, so it's closer to the bottom. It's actually even better with share bars, and then pretty close with tick bars. And the main difference between time bars and the other ones, case, tick, and volume, is the way large moves are accommodated. With time bars, you see a lot, well, maybe not a lot, you see consolidations of really small bars right here, which get compressed to 1, 2, 3, or 4 bars on case, little more on tick, and a little more on volume. But the best visualization of the volatility, right? Because this is what we're talking about right here. So it's either really small or large. There's also obviously the bars in the middle, but the tails of the distribution, the right tail being really high volatility and left tail being really small volatility, they take up to a lot of this distribution on the time bars. So let's plot ATR, remove the bar count, and then time. Okay, so first let's take a look at time between bars. How much time passes between each bar? For 60-minute bars, it's most of the time 60 minutes. The only difference is at night, when there's 1 hour trading halt. For Kase Bars, it's much more interesting because sometimes the bar, it takes 10 hours to create one bar, like right here. It was the period of really low volatility, really calm period, and sometimes it takes only a minute or 2 or 3 or 5 to create eight and a half bars. So the ATR, the 14 period ATR, is pretty much all the time 8.5 points. This is what we're trying to get, right? Sometimes when there's let's call it like a slippage in trading, it will be little more than that. Right here it's a little smaller, but it was yeah, it was the end of the trading day. So with Kase Bars, what do you get? You get constant size, and your volatility is on time. So the changing factor is time. The constant is bar size. Okay, and then there's so let's go back for a second. So time bar and Kase bar, they almost the opposite, right? Here you have a constant time and changing volatility. Here you have a constant size of the bar, but your what changes is time taken to create each bar. These two, volume and tick, are a mix of these two. Most likely, right right here, the time taken to create a bar is less than 60 minutes, but sometimes it's really long. So it's 597, so it's almost 10 hours to create this tiny bar right here. Then 11 hours to get this one, and then your ATR will not be constant like in Kase Bars, but will behave somewhere in between the regular time bar and Kase Bar. So it will not be flat, meaning it will not be the constant size, but it will not be as variable or as with time bars. Let's take a look. So here on time bar, the ATR goes from 3.5 to 15, which is a really really wide range. On the volume, the lower boundary will be approximately 6 points, and the upper boundary will be 15. So your ATR will not drop as low as the one on the time bars. And the same thing goes for tick bars. Let's take a look. The high is in teens, high teens. So right here is 6, almost 17, and the low is 6. Remember here the low was 3.5, or sometimes even lower, even less than 3 points. So what do you gain and what you lose by using time bars? You gain clarity because it's easy to deal with 15 minutes bar, 20, 60, or 240 minutes 4-hour bars, but you have to live with periods of really low volatility and the short periods of really high volatility. The opposite is for Kase bars. By using Kase bars, you make all your bars equal, but what you lose the sense of time. Sometimes you will get, let's say, 5-10 bars within 20 minutes, and sometimes you will have to wait half a day for a next bar. So with Kase bars, they filter out a lot of noise, but you have to, in order to trade them manually, you have to be glued to your computer all the time, because you don't know when the period of high volatility will start, and this is when the action happens. The solution is to use alerts or automated strategies to do trading for you. Okay, so we have ATR, and now last thing I'll show you RSI. Okay, so now let's take a look at RSI indicator. This is a basic settings with RSI 14 and 30 being oversold, 70 being overbought. I will be only looking at the extremes. So in the periods of really high volatility, your RSI can go as high as 82 or as low as 22. So go above 80 or go below 20, which is pretty high or low, right? You don't see that very often on even on a daily bars, but on a minute bars it will happen fairly often. I'll do Kase bars at the end, and let's take a look at tick bars. So right here we can go as high as 80, but we don't go below 20, or maybe here. So the extremes are also possible, but not as extreme as the ones on the time bars. And usually you get more time to react. Let's take a look at this bottom. So it was only for a short period, and here you had more bars, and right here it was the same. Tick bars, RSI doesn't go barely goes to 80 and barely touches 20. So it's not as extreme. And right here you have a Kase Bars. So in the uptrend, because this is obviously an uptrending trending market. The RSI can go as high as 80, but usually it barely touches the 70-point line. So if you're looking for reversal signals, it's actually better to use Kase Bars than any other bars, because what you analyze with RSI is the movement, right? Price movement. And since your window that you're looking back into the past is fixed, then it's really good to have these bars equal, so you can you get, like, every bar gives you the same amount of information, or as opposite to time bars, where with really low volatility your RSI will drop to 50 point zone and stay there forever. Here you'll only get a bar or two in a 50 point zone. Okay, so we have indicators, and now the last thing we'll take a look is the strategy. Okay, the strategy we'll be working with is it's called Advantage and Bar High Low Stop EXT. It's available on our website. It's really simple yet powerful indicator. In the comment section, I'll leave a link to a video that where I show the features of this package, of this indicator. For now, let's just keep the default settings. So the length is 2, so we're looking 2 bars into the past, and then the signals, we take end of the bar, we take all positions long and short, and all signals entry and exits. And let's take a look at the performance report. This is a performance report for 60-minute bars, right? It's not well, it's basically it's all 178 trades. The strategy generated loss. Okay, so that was the strategy on time bars. Let's try volume. A little better. More trades, because it took almost 200 trades. And then obviously in an uptrend, the profit was generated from long trades, and the short trades gave us loss. But overall, we stayed in a positive territory. Let's check tick bars. A little worse, because it's more or less close to 0. Same amount of trades, or really close, 190. Same statistics. Long trades ended with profit, short trades ended with loss. And then the last one, why am I doing? And then last one, Kase Bars, my favorite. 200 trades almost. Pretty decent profit, and let's take a look right here. Obviously long trades gave us profit, but what's interesting, short trades ended up almost neutral. The profit factor was 0.96, meaning that even in unfavorable period, because it was obviously a strong uptrend. If you trade short in uptrend, it's obviously hard, right? But this strategy, it's a really simple strategy, right? Nothing fancy. It ended up close to zero, and then the profits were generated from long trades. Let's clean this mess. Okay, so the key points I would like you to remember. First, time bars are not the only option. They're easy to understand, but they actually the hardest to trade and to analyze and to get information from your chart, from what you are looking at. Then there's volume and tick bars. I think they the next level up from time bars. One is they fairly easy to understand, because it's easy to visualize 50,000 traded contracts, and then you start your counter over, or 10, 20, 30 or 50,000 trades, and it will work the same. And the advantage of these bars is you get your indicator to work a little nicer. Remember, RSI, your deviations from 50 line will not be as large as on time bars, because the way these bars are created. And then the little gem, let's call it, are Kase bars. They are the easiest to work with, but it requires new approach, right? So sometimes you will have to wait hours for some action. Actually, same thing happens with time bars, but at least your chart keeps growing. With Kase bars, it will not be it will not happen, because you can wait even 10 hours for one bar to create. And the best part about Kase bars is the way your indicator will behave. Your moving average signals will be cleaner. Your oscillator signals will also be more accurate. On the negative side, with TradeStation keeps only it's actually a lot, but keeps only 6 months of tick history. So you can only go back 6 months in time. And the actually pretty important thing is also Kase Bars. They require more computing power. If you try to load really liquid contracts like E-mini or crude or gold and go back 4, 6 or 6 months, then depending on on your computer, but it can take a long time for the chart to load. Okay, so that's it for now. Stay tuned for more videos in the future, and remember that it was not financial advice, and the main mission is to educate. Happy trading, stay sharp, until next time. Thanks.